Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So gold market again and again confirms our suggestion that it really has some additional supportive factors and it behaves well a bit differently to what the technical analysis suggests. So for example, yesterday we have considered few scenarios for action and potential downside reaction on the gold market to the upper body or in completion of the monthly target. But you can see that gold is going with our second scenario. So if you remember, we talked about two patterns on the intraday charts, the hand shoulders and three drive. And three drive right now stands in place with this recent upward action. So currently, we just call, be careful with the taking any short positions. Whether you will buy in the current circumstances or not, this is, well, the personal choice. It's just because we share with you what the technical analysis suggests. Technical analysis stands that in favor of no purchases, just because market had overbought, and it's normal to wait for a pullback. But the overall situation that stands right now in the world could really support gold, and gold could show upward continuation. So from that standpoint, here you will have to make your your personal decision, whether you would like to pull back or you will act in a different manner. But one thing that we just would like to say is that maybe it makes sense to not take the short positions right now on the gold market, at least on the daily chart, on the high time frames, and do not trying to sell it. Here's actually we have two issues today. First of all, as the recent Jerome Powell statements were mostly dovish, it's just because he additionally said why actually you could see the jump on dollar arrivals, you could see drop on the dollar index, a rally on the gold at the same time, is that he said that if everything goes as they expected it, those means the Fed. So then the majority of the members of the market committee suggest the rating cut in this year. So that what he said additionally to his previous speeches, and that has made an impact on the markets across the board. Second moment, I already has shared it in the Telegram channel. If you do not read the Telegram, this really big risk of escalation between Israel and Iran now stands on the table. So the CIA chiefs has take the fly right now into the Telegram to the Tehran, and this is really unprecedented issue in recent history. Those that the CIA head of the CIA Burns flying to the Tehran. So in Israel, as bomb shelters started opening, all military persons call out from the vacations, and actually some other situation started around. So that's why currently in the nearest 48 hours, it really will be big questions what will happen. Correspondingly, if you understand, a reaction on the gold market also could be different. If it will be possible to avoid this escalation, then some relief probably should happen, especially if we will get some significant improvement in the payrolls report tomorrow. So retracement might start. The opposite is also true, but unfortunately, these are the factors that we can't control and can't foresee. This is really most negative moment in this current situation. So speaking about the technical side, you could see that market still stands overextended, as in a daily chart, as in a weekly chart. Our next target to the upside is 24.56. We talked about in the weekend. So, but it's relatively extended in the long term. Now, bearish pattern already stands in place. I will show you a bit later. And if pullback down starts, it probably could be first 22.44, but it's more probable it might be down to the 22 area. This is confidence support on the daily. daily oversold, and it's very typical performance when the market drops out from the weekly overbought to daily oversold. This is normal retracement. Besides, as you can see, this will be just the 30% pullback. It's not really big pullback for the gold market. That's what about in the daily chart. On the lower time frame, on the follow time frame chart, you could see here's the market just keep going higher. That's two levels that we have. Around 2244, we also have this confidence on the follow time frame chart. But this chart brings not many things. Additionally, the pattern, you already could see it right here, well, the three drive that I'm talking about, but it better could be seen on the hourly chart. Here is the three drives, and that is the specific type of the free drive, which is 1618. So I will show you in the detail on the trading view charts. Here's how it looked like. You could see that the both tops stands at 1618 to the previous one. Not the common thing when the first one stands with the 127 ratio to the first, and second with the 1618 to the first. But both stands with the 1618 to the previous one. This is also the three drive pattern. This is the type of the three drive that didn't exist. But at the same time, you could see that it has the limited target. So usually if three drive starts working, its minimum target stands on lows between the second and third drive, which is approximately 2280. Right? So for us, this is just actually minimum reaction. 2280 is just, well, on this chart it stands right there. There is actually futures chart that has a bit different price scale. But with this free drive, we could suggest the drop probably to the confidence around 2260 area. So as you can see, even if free drive starts working, it has minimal impact on the overall picture. That's why I'm talking to the bears. If you would like to take the position, of course you could use this free drive. You could place relatively tight stop, but just recognize the risks that you carry. Decrease the trading volume, or protect your position and minimize the risk. And on high time frames, on the daily and weekly, despite that we are the overbought, personally, I do not want to take any short position. I would better consider any dip that we could get in the gold as an attempt to go long. That's why currently it's very difficult to make the forecasts on the retracements. Although targets we could see, we know the targets to the upside, but it really big uncertainty about the retracements, when they will happen, how it will happen, and what will be in the background. We just could recognize some levels to watch for. But for entry, we just have to sit on the hands and wait what will happen. Because from the technical point of view, we should not take the long position at the overbought. That's following from the technical rules. But this decision will keep on up to you. So if you would like to, you could, and you are sure that market will keep going higher. So of course you could take the long position. We're just sharing with the common practice, what's common from the technical analysis. And need to wait for reaction on the payrolls or something that let us to take the normal, from the technical point of view, normal position. Not at overbought, at some support, as usual we do. So that's our view on the gold market.